With just 4 days until the monthly candle close, Bitcoin is preparing to do something it has never done before. In today's video, we're going to be taking a look at the macro and the short-term charts, jumping into exactly what you need to be paying attention to and what we expect to happen next. Let's go ahead and get into it. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are going to be doing a detailed and comprehensive analysis for Bitcoin's macro price action, diving into not only the key levels you should be paying attention to, but most importantly, the upcoming monthly candle close and why this monthly candle close has the potential to be a historic moment for Bitcoin's price action. We'll also be jumping over to the short-term price action, going over the key levels you need to be paying attention to and the RSI trend lines, and finally finishing up on the method I will be personally using to not only predict the top for Bitcoin, but plan my profit-taking strategy. So without further ado, we'll go ahead and get stuck into it. But guys, make sure you smash that like button, hit that subscribe button, and leave a comment down below. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news, our help, and our daily video chat. If you're interested to find more information, click the pinned comment in the free channel, watch this video over here, or you can read this message for more information. If you're interested in joining, you can contact me by clicking my name in that message. Let's go ahead and dive into the video. So starting on that market data, how are we looking? 24-hour volume is sitting at a total of 91 billion. This is up 16.81% in the last 24 hours. With that, we have seen liquidations kind of hang around the same price point. We're sitting at 92 million in liquidations. This is down 0.28% in the last 24 hours, so pretty much no change. Looking at those liquidations, 33 million have come from long positions and 59 million have come from short positions. Taking a very brief look at the price action, we can see in the last 24 hours, we have seen a decent amount of sideways chop in this small range. We're looking around an $800 range. We've seen these chop toward the upside and downside, again liquidating both parties. Overall, the trend is looking fantastic on the short term, as we have seen a strong bounce from the range low moving into that midline. We'll be discussing more about this in today's video and what we do expect. Moving over to the broader market, so DXY is looking okay. Again, guys, we have seen this 2-month-long trend break toward the downside. You can see the price action has lost that uptrend. The uptrend has been intact since the start of January 2024. We can see the confluence on the RSI and the breakdown of that RSI trend line, suggesting overall momentum has flipped negative. This is indicating overall weakness for the DXY in the short term and could potentially result in a continuation to our next level of support. The next level of support at 102 to 103 is going to be the expected level of which the DXY shall move toward on the short term, provided momentum remains negative. Overall, it is in a downtrend. Overall, it is not looking fantastic. Moving over to the broader markets, the S&P 500 is looking very healthy, sitting above that $5,000 level. A weekly candle close below $5,000 will likely result in a short-term correction to retest the high time frame area of support, which is going to be that prior all-time high. Even if we see a correction to this level, we are still macro bullish. However, while we remain above 5,000, the likely direction is still very much a continuation upwards, and we would not be expecting a correction towards our all-time high. What we are looking at the moment is for a move up to 5,200, 5,300, 5,400, these psychological whole numbers of resistance where people are likely to put their orders at. So at the moment, while we remain above 5,000 on the weekly, we are very much looking for a continuation upwards. Looking at the Dow Jones, exactly the same thing goes over here, guys. We have broken through about $39,000 resistance. We are looking for a swing to the 40,000 psychological level while we remain above this 37,700 to 38,000 level of support. We are expecting a move to 40,000. It is only if we break below that level would we expect a short-term correction. So that is it for the traditional markets and the DXY. Let's go over what we're going to be discussing today for Bitcoin and then get into the video. So like we said at the start of the video, we're going to be doing a overall macro analysis discussing the upcoming monthly candle close and why this monthly candle close is significant in regards to the bull run and the macro trend. We're going to be going over a very important technical indicator on the monthly, which is going to be the RSI. We'll be discussing our take profit plan for Bitcoin and when we expect the top to be in based on two different theories, a momentum theory, which I personally developed, and our date range trend theory according to the 4-year cycle. We'll also be jumping over the short-term price action, discussing what is happening here in regards to momentum and the current consolidation range and what we expect to develop from this range. So before we get into it, a quick word from Bitget and BingX, and then we'll jump on in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on into the video, starting on that macro chart. So guys, a very, very important moment is coming for Bitcoin, and that is the monthly candle close for Bitcoin. And this monthly candle close is not like the other monthly candle closes. This one is a monthly candle close of utmost significance in regards to the start of the next bull run, the official start to the bull run. So let's go ahead and break this down and talk about why this monthly candle close is important and what could come as a result of us closing above the specific level, which is 48,000. So starting off, we have to look at our structural levels historically and tell you and basically identify why these structural levels have significance historically and what they could potentially result in moving forward. So we're looking at our very key level of 48,000, which is that dotted trend line. The dotted trend line is a representation of a yearly level of resistance that has played out in prior cycles. You can see the dotted trend line pops up over here at 48,000. It pops up at this level back in 2019 at a level of around $12,000 and even pops back all the way back in 2015, 2016 cycle at around $700. The dotted trend line is simply, okay, the dead cat bounce high, which is created after the all-time high. We create an all-time high, we enter a bear market, we bounce, and we create a high point, which is going to be a yearly level of resistance, which remains as a yearly level of resistance for, we're looking around 2 to maybe 2.5 years on average. This dotted trend line is not only a yearly level of resistance, but it is a major macro trigger point, because what we have noticed is every time we close a monthly candle above that level, we end up entering an official bull run, which takes us to the next all-time high. You can see over here, and you can see a monthly candle close right over here, resulting in a bull run starting and a continuation to an all-time high. So we can identify this level as not only a yearly trigger point, but it is actually the point of which the bull run will officially initiate if it is broken on the monthly chart. Now, words are words, right? But let's go ahead and take a look at it from a trend perspective. The best way to prove that we'll see a significant surge of strength, of volume, and of volatility once we do break over this level is to do a simple trend angle analysis. Taking the trend angle from the all-time low, okay, the bottom, the bear market bottom, to the breakout on the monthly, and then taking the trend angle from that breakout to the all-time high, we can see the steepness of the trend, okay? The trend angle significantly increases from sub 30% to upwards of 60 degrees, okay? That is a significant shift in the angle of the trend, and it tells us that this section of price action in comparison to this section of price action is significantly weaker. That tells us that this second section of price action where the trend angle is a lot steeper is an area of significant relative strength. When we see the trend angle steepen over a multi-month to yearly long time frame, that is what we would classify as our traditional 4-year cycle bull run. And that generally happens when we break a monthly candle close above the dotted trend line. Now, there is one more indicator that can help confirm that. If we take a look at our RSI, and again, guys, we've gone over this stuff before, but it's very, very relevant as it's only 4 days until the close. What we have seen on the RSI, if we draw a vertical trend line, we can see that every time we touch that dotted trend line, and I might actually change this to red really quickly, we have a rejection on the RSI between the points of 67.41 to 66 on the histogram. We retest the dotted trend line, we reject, the RSI fails to break above. Let's go again. We retest the dotted trend line, we reject, the RSI fails to break above. But look what happens when the RSI breaks through that level. We see the RSI break through that level, and then we see a month after that dotted trend line break. We see the RSI break through that level, and what do we see? We see that dotted trend line break. What are we seeing right now? If we zoom up, the RSI is breaking through that level of resistance, and the price action could be primed for a monthly candle close above 48,000. This is very significant as it is suggesting a significant amount of macro strength, and we need a large amount of macro strength if we are going to be breaking through a major yearly resistance. So overall, guys, according to the data right now, we are looking fantastic. Now, it is very important to note the RSI moves on pivot points. So technically, although we are sitting above this level of resistance, it is not going to be confirmed until we do get that monthly candle close. That is the most important thing, and that is what you should be paying attention to. So let's move over to the next point. When do I expect the top to be in? And how am I going to be taking profits moving into the top? So at the moment, there are two theories we are going to be using. And theory number one is a very simple theory, yet has proven to be effective. Theory number two is a theory that I've developed based on my own trading technique, and I'll be sharing that in just a moment. So let's go over to theory number one, which is a standard theory which has been expected and we have seen play out multiple times in the past. This is going to be a days between top and bottom trend analysis from different cycles. This is our first 4-year cycle, our second 4-year cycle, and our third 4-year cycle you can see over here. What we do notice is the distance, okay, in terms of days between our bottoms to our all-time highs and our all-time highs to our bottoms are actually equal. The days between our all-time low to all-time high is a total of 1,064 days. Our days between our all-time high to our all-time low is a total of 364 days. Now, by no coincidence, look at the next cycle. The days between low to high is exactly 1,064 days, the same amount we saw in the prior cycle. The days between high to low is exactly 364 days, the same amount we saw in the prior cycle. So assuming this pattern continues, we would expect the top to be 1,064 days from the low, which takes us to an exact date, an exact date of the 6th of October 2025. Now, regardless of whether or not this is going to be accurate, it doesn't matter. It tells us that the 6th of October 2025 is a date of significant interest, and we should be paying attention to that date if we do move forward. Now, moving over to the next theory. This is a more complicated theory as it doesn't give us an exact date of which we'll be taking profits, more so a range that the top could develop in and when we'll be taking profits. So what we have noticed is every single time we break above the 80 point on the RSI, we have between 7, to 10 bars between we create an all-time high. So we can see over here, we create that top point over here, we break above the 80, and between that breakout to the all-time high, we have between 10 to 7 bars. We'll show you again over here. We break the 80 point on RSI, we drag the date range across to the all-time high, and we can see over here again, we have, let's just go 10, there's 10 bars over here to the all-time high, 10 bars. So if we draw a vertical line from the point of which we break the 80, to the point of which we reach that all-time high, that is our measured distance, 10 bars. Again, guys, we break the 80, it's going to actually be a little bit forward, but it is a pivot point. We break the 80 to the point of which we create an all-time high, that is going to be 7 bars. Now, 7 bars is equivalent to 7 months. We break the 80 over here, we draw that trend line across to the all-time high, that is going to be 10 bars. So what we have noticed is, when the 80 point on the RSI breaks, we have between 7 to 10 months after that point when we will create an all-time high. So that is what I'd be looking for to take a profit. I'd be looking between, 7 to 10 months after the 80 point on the RSI has been broken to look to scale out of my positions. Now I'm going to say it again just in case people don't understand. Once the RSI breaks the 80 point, I am going to wait 7 to 10 months. After the 7-month period, there's a 3-month window from 7 to 10 months, that 3-month window, Within that 3-month window, I will be scaling out of my positions, maybe 5% a week, etc., etc., So the 80 point breaks, I wait 7 months, and then after 7 months, that 3-month window between 7 to 10 months is when I'm going to be scaling out my positions and taking profits. Let's go ahead, guys, and jump over to the short term and wrap this video up. So what we're looking on the short term, we are looking for, again, a break of that RSI trigger point. We absolutely need to see a breakout of that RSI trigger point for a continuation upwards and through this level of resistance. Really quickly, if we do zoom out, we are in a horizontal channel. Now, this horizontal channel is a channel of utmost significance. If we go to the monthly chart, we know we have 4 days to close this candle above this level, which is very important because in the next 4 days, if we do see a steep correction for Bitcoin, well, then we're not going to close that monthly candle above. And that, of course, will lead to what we'll talk about in another video if it does occur. However, while we are in this channel, we do have the potential to do so. And thus, this channel is going to be a massive determinant in regards to whether or not we are going to get that monthly candle above or below that macro trigger point. So let's discuss. At the moment, we are in a horizontal channel. We have support, we have resistance. A horizontal channel is a neutral consolidation, meaning we have equal highs, equal lows. What does that really mean? It means there's an equal amount of selling pressure at the resistance as there is buying pressure at the support, which forces the price action to move sideways. Eventually, the sellers or the buyers will exhaust, and the price action will continue in the direction of exhaustion. Very important to understand. So what do we look for on these channels? A breakdown, of this level of support will likely result in a continuation to the next level of high time for support, which is going to be the macro uptrending diagonal trend line, which will result in a retest of that 48k level, which is actually going to be that dotted trend line itself. So you can see how that is a risk for a breakdown of that dotted trend line if we do break down out of this short-term consolidation pattern. If we look for a continuation upwards, however, a break upwards will result in a breakthrough that major 52 to 53,000 resistance and facilitate not only a break of the dotted trend line, but will result in a move to 60,000 quite rapidly. So you can see how this short-term consolidation is a consolidation of significant importance in regards to actually where Bitcoin is going to go next on the higher time frame. At the moment, the trend is bullish within this range. When we retest the area or the range low of support, we are actually in a uptrend until we reach the range high and show relative weakness to the point at which this trend line is not going to break. So in the short term, like we said over here, and if you go to our VIP, like we said, if you're in the VIP channel, you would know, okay, you can see our trade. We took a long at that range low, because we did expect that range low to bounce, which is down over here, and it has bounced very nicely. What we are looking for, however, when it comes to breakouts, we look for trend, we look for structure, and we look for strength. So trend, do we have a breakout in the trend? Do we have a breakout in the structure? And do we have the strength required to validate that breakout? In this instance, we don't have any of them yet, okay? We cannot confirm a breakout, of course. We haven't broken through a trend, we haven't broken through a structure, and we don't have the strength to do so yet. Now, if we do see that RSI break through the trend line, that would tick off one of the boxes. That would indicate we have the strength required to break this level of resistance. That means if we do break that RSI trend line, the momentum within this range of price action will have turned positive, and that will facilitate a break through that level of resistance. So overall, we are actually looking pretty bullish for a break upwards, provided that level of support can hold. If this area of support is lost, only then and then do we expect a correction lower. Until then, the expectation is that we'll still go upwards. Thank you for watching, guys. I hope you have a fantastic rest of your day, and we'll catch you guys in our next video on Wednesday. See you then.